I wanted to make this quick video because recently a lot of people told me that they keep losing money even though they apply all the fundamental trading rules like setting up stop losses, risking only a fraction of their account, and so forth. But when I took a deeper look at it, I found out that all of them had one thing in common, which led them losing money. So in this video, I'm not going to tell you stuff that has been repeatedly so many times, but rather show you some of the unconventional mistakes that you didn't even know you were making. Let's go. First of all, choose the right time to trade. So what do I mean by that? The most common mistake I see people make is to trade at the New York Open or right after the New York Open. For those of you who are new to trading, it's basically the time when the stock market in New York opens at 9:30 local time in the morning. And there's usually a lot of hype around it, right? A lot of live streams, fluctuations. And the most common scenario that plays out is there's going to be a stop loss hunt to either side and then a quick reversal, sometimes completely against any indicators. So it is very risky and leads to many new beginner traders just ending up getting liquidated, right? So oftentimes it's just a gamble and there's absolutely no need to take this gamble. Just wait 1 or 2 hours after New York opened when the trend or the direction has been set and then look for an entry. The same basically also applies to the Japan Open or any other major market opening, but it's not going to be as much of an fluctuation as when New York opens. So as a beginner, I would advise you to set up a clock or set up alarms when all the major markets open so you can avoid getting liquidated. Also a side note for all these people who are working full-time and looking to trade on the weekend, I personally would advise against trading on weekends because simply there's not much liquidity or not much going on. And if there's going to be a move, it's going to be an unpredicted move. So it's rather risky and not worth putting your time and effort in. So just go out and spend some time with your family instead of sitting in front of your computer and waiting for those micro moves. The second mistake a lot of beginners make is to set up a monetary goal for your trading journey. You should never trade with money that you don't have or with money that you need to pay your bills. The problem is when you set yourself a goal like I'm gonna make $100 a day or at the end of the month I will have my account to $1,000. What ends up happening is that once you don't really reach that goal, you will start over trading, taking suboptimal entries and exits, and even losing it all. So with those monetary targets, you basically put yourself under pressure that is not necessary. The best traders that I know with the highest learning curve, they treat trading as a strategy game, similar to chess, where they have to make the best decision at a time and simply let the trade ride until their strategy tells them to quit. So yeah, before you set up your trading account as a mean to buy a Lambo or fund anything else, try to improve on your skills and your win rate. Speaking of win rates, when I ask new traders about their win rate, 80% of them don't know because they don't journal. Which leads us to our third and last mistake that rookies make, which is simply not writing their trades down and not having a journal. Out of the 3 mistakes, in my opinion, this is the easiest one to fix. Because this is the most basic thing to be a consistent trader. It will not only make you trade less and not overtrade, but also holds you accountable for each entry that you made. What I want you to do is put a second slot to each entry and each trade that you make and write down the exact reason why you entered this trade. After a few weeks or months, let's say when you accumulated 100 trades, you can look at all the losing trades and why you entered those trades. This is actually the way I learned many years ago because you will quickly find common mistakes in all these losers that you made. So yeah, if you manage to implement those 3 things in your trading and do it consistently, I promise you that you will see better results by no time. If you enjoyed this video, please leave a like and let me know in the comments if I missed something. Thank you for watching and I'll see you next time.